Hi friends, welcome to A to Z Learning channel. This video is focused on the initial public offer IPO. There's a new company IPO coming next week. Company's name is MTAR Technologies Private Limited. And in this video, we'll help you understand in a very simple manner all the details that are relevant for you to consider when you make your decision to apply under this IPO or avoid this IPO. So this is going to be an important video if you're looking to consider, if you're looking to invest MTAR technology IPO. So without further delay, let's start our video. This video has got three main sections. The first section, we will focus on the company profile. In the second section, we'll talk about key IPO facts. What's the objective? What are the key dates? What's the issue size? All those sort of issues. And in the final section, we will assess this IPO using our proprietary 5-point assessment metrics to help you understand whether this issue is worth applying or it should be avoided. So without further delay, let's start the first section, which is on the company profile. I don't know how many of you know about, but MTAR is relatively speaking a new company. It was incorporated only in 1999, so they have been in operations for just about 21 years. As the name suggests, it's a tech company, which is a leading national player in the precision engineering industry. So the space, your defense, your nuclear industry are the kind of main areas where they supply their product and solution. Since inception in 1999, they've expanded their product portfolio quite significantly, and currently they have a wide range of complex products for Indian nuclear, defense, and space sector. They do export their products as well, and we'll talk in a minute that in terms of their key clients are ISRO, NPCIL, DRDO, and Rafale. Rafale is the company from where Indian Defense or Indian Air Force has bought the new aircrafts, fighter aircrafts, and they supply some of the products to them too. They have got 7 state-of-the-art manufacturing facilities in Telangana, in Hyderabad, and the promoter family is basically Reddy family. Parvat Srinivas Reddy is the main, and his Reddy family collectively own currently about 62% of the company. Post this IPO, because this IPO has got two parts, one is the fresh issue and the other part is the offer for sale. So post IPO and issuance of fresh issue and the offer for sale, their promoters holding will reduce to 50%, but they'll remain a significant investor in the company. So there is nothing untoward there in my view. What are the company's strengths? I think I could pick up the two standout company strengths. One is that their product portfolio is highly diversified. Some of their new products have got almost 50% margin potential. So it's a growing company and it has got product portfolio which can give significant margins to them. And the other standout factor in favor of MTAR Technologies is that they've got 7 modern manufacturing facilities. Now let's look at their financial performance. If I look at last 3 years and 9 months of the current financial year, then as the table on your screen suggests that back in 2018, their annual revenue was 160 crore, which grew by 16% in 2019, then grew further 17% to 218 crore in 2020, and already for this year their revenue for first 9 months stand at almost 178 crore. If I prorate this to kind of calculate the annual value, then this has the potential to deliver about 10% of revenue growth in the current fiscal year as well. So overall, The growth is slightly down, but we all know what has happened in the current fiscal year due to pandemic and all that stuff. So I won't read that much in terms of why the revenue has gone down. Let's look at the profitability picture. The company had a profit level of about 5 crore in 2018, which grew up quite substantially to almost 39 crore in 2019, which was a increase of 600%, over 600%. Then in 2020, the revenue went down slightly. I think there was some unexpected profitability level in 2019, and 2020 onward it stabilized. So 2020 full year performance was full year profitability was 31 crore. And if I prorate current 9 months performance and calculate the full year, they would again deliver about 16% growth over last year's profit. So overall revenue profit picture is good. It's a profitable company. It has got great order value or order book, and they've got impressive clients, which has got some portion of that is also export oriented. So overall, good company profile, solid financial performance. Now let's move to the second section, which is where we'll share with you key IPO facts. The first important thing to know is that what is the reason they're coming in the market to raise money. So first of all, they want to make sure that they reduce their borrowings, so they'll either partly or fully repay the borrowings, all the borrowings that they have. They'll use this money for working capital requirement and general kind of corporate purposes. So overall, from an objective perspective, it's these are good objective to be raising money for. IPO dates are from 3rd March to 5th March. So next week it will open from say Wednesday through Friday, and issue size is just under 600 crore, where about 125 crore is fresh issue, which will go towards working capital need and paying of their borrowings, and the balance is offer for sale, where promoters are going to be selling some of their holding. IPO pricing is between 574 to 575, whereas the face value of the share is 10. Therefore, the market lot would be about 26 shares, which roughly gives you an investment opportunity of 15,000 rupees. The share will be listed on both BSE and NSE. The key dates, allotment will be finalized by 12th of March, and your demat account will have your shares. If you get allocation, you get allotment by 15th of March, and then the listing date is currently scheduled for 16th of March, which is Tuesday. Now let's move to the most important and final section, which is where we apply our proprietary 5-point assessment metrics to help you assess whether this is an issue worth considering or avoiding. So let me kind of quickly remind you about what is this 5-point matrix, assessment matrix that we have. We look at 5 main factors when we assess any IPO. The first one is what is the history of the company and the purpose of the IPO. In the second factor, we will look at promoter background, their reputation, and interest for the future. In the third section, we look at what is the general market sentiments in the subscription level of recent IPOs. And in the fourth section, we will look at industries and the strength of the company advantage. So what are the competitive advantage company has relative to industry. And the last is basically what is the IPO pricing and how the gray market is treating them. So these are the 5 kind of well diversified ways of looking at any IPO. And we have given our rating on this, as you can see on your screen. From our side, against all factors, this company is a big thumbs up. It's a green rating. We consider the history of the company is good. It's a more than 2 decades old company. They've got impressive client list, and the purpose is to fund working capital and expansion. They're bringing their debt down, and promoters, even after kind of selling some part, they'll still have 50% of the company ownership. So even their interest are tied to their investment interests are also tied to the overall future performance of the company. Market sentiment wise, as you know, recent IPOs all have been oversubscribed quite significantly, and most IPOs have seen significant premium listing. Therefore, we think the market sentiment is very positive. Company has got virtually no competition because they are on their own in their space, so therefore big green there. IPO pricing is probably the only factor I would say it's slightly overpriced. If I look at their current earning per share, that places them almost at 50 PE ratio, which looks very high to me. But when I look at the gray market scenario, gray market is placing a huge premium on this. Therefore, overall, my assessment, even on pricing, is quite green because it's a growing company, it's a profitable company, it's a good dividend paying company as well. So overall, our view on this IPO is, first of all, we looked at the pre-IPO private placement that they have done, which was done at 540. So therefore, the price of 575 doesn't look too bad. But overall, relative to their earning potential and the book value, it does look slightly overpriced. But the company is profit making. It has got good history of dividend payment. They have issued twice bonus shares as well. So, and they have got great order book. So overall future looks very, very secure. Gray market premium wise, the gray market is placing a premium of between 40 to 50% on the listing day, which is very, very impressive. So overall, our assessment based on this is that it's a good IPO to consider. It's a good IPO to apply for. You have good chance to get listing gain, but it is also good from a medium term investing perspective. So overall, big thumbs up from our perspective. Hope you like our content in this video. Please press the like button and share with your friends and family this video. And if you've not subscribed our channel A to Z Learning as yet, please do become part of our viewers community by subscribing our channel, and that way you will get notification on all our new videos immediately. In fact, as a viewer family member, you will also get the chance to suggest the topic on which you want to see the future videos be made. So we always kind of pick up ideas from our viewers community, viewers family, to shape what topic we pick up for our future video. So thank you very much for watching our video and good luck with this IPO.